Back in 2023, I deposited $500 into my Webull account with the intent of turning it into $1,500. And luckily, I did hit that goal of $1,500 on the account, but that $1,500 quickly grew to $5,000, and that $5,000 to $50,000, and the $50,000 to $100,000, all in the matter of a little over a year. If you're skeptical, I posted every single trade I took live in front of 8,000 Discord members on a daily basis. That's 8,000 people seeing me doing this challenge live in real time. From then to now, I've completed several other $500 to $5,000 trading challenges while posting every single trade I took in the Discord. But this time, I want to take things a step further. This time, we're going to be doing a 500 to 100K challenge, and not only am I going to post every single trade I take live on a daily basis in the Discord, I'm also going to be creating YouTube videos to keep you guys updated on my journey from $500 to 100K once again. In this video, I'm going to be covering the trading strategy and the trade management strategy that I used to be able to scale my portfolio back in 2023 to 2024. If you guys are new to the channel, make sure you guys hit that subscribe button, like this video, and click the first link in bio to join my free Discord where I trade in every single day. This challenge is going to be hard. It's going to be difficult. We're going to have to break some risk management rules. With the proper strategy, execution, anything is possible. So first and foremost, we're going to jump into the strategy. So I'm going to break this down as simple as I can. I'm going to give you guys the step-by-step directions of what tools you're going to need and how to execute this strategy and what indicators you're going to need. So first and foremost, you want to get the free version of TradingView. TradingView is absolutely free. It's a great tool to scan and analyze charts, and it comes with a bunch of different cool features. So if you already have that, you're in good hands. Next, you want to add the basic VWAP indicator. So I'm going to quickly do that here, give you guys a quick demo. So you just want to go to indicators, and then in the search bar, just type in VWAP, and then you're going to see volume weighted average price. And once you click on that, the indicator should pop up right here under VWAP sessions. Now go into the settings of this indicator, and this is completely preference, but I put my VWAP as red, and I put the upper band as purple and lower band as purple. And then you're also going to notice if you have the standard VWAP, the band's fill is going to be filled in and it's going to be green. Now there's two options. You could actually uncheck it to remove the band's fill, but I've noticed that when you uncheck it, it usually comes back when you restart your TradingView. So the best thing to do to keep it permanently off, you want to go into it and change the opacity from 15% or whatever it's at to 0. And this is going to give your VWAP a clean and transparent look. And then just press OK and don't touch anything else. Once you have those things done, you're good to go for the pre-tasks. Now we're going to jump into the actual trading strategy and the step-by-step model. This model is broken down into 3 simple steps. I'm going to cover all of these steps, and then we're going to go one by one on the chart to cover them. So first and foremost is the formation of an inverse fair value gap after 9 a.m. PST. What does this mean? It means that we're going to wait for an inverse fair value gap to form. So fair value gap that's red, we're moving towards the downside to form after 9 a.m. PST. This is roughly 2.5 hours into market open. So we're not going to take any trades on this exact setup for the first 2.5 hours, because that's where a lot of inconsistencies are due to the volatility and volume. Next, we're going to wait for a sweep of an order block or liquidity. Order block and liquidity are fairly simple and easy concepts, and they're very similar as well. In this video, I'm going to show you guys a basic way of understanding how to identify them. And in this strategy, it's not entirely necessary for an order block or liquidity to get swept. As long as you have confirmation or the third step, you guys can take an entry, but make sure you go light. But it's always good to have your setup backed by an order block or liquidity. Third, you need reversal confirmation. So when an inverse fair value gap is forming, that means a stock is going to be moving to the downside. Now, in order to have confirmation of a reversal to the upside, we're going to need a break of structure and a break of lower band VWAP. Now, I know that can sound confusing when I explain it, but once I show you guys on the chart, it's going to make a lot more sense. So now that we have the basic steps down, we're going to go to a random day on the chart. Bear in mind, after backtesting this strategy over hundreds of trades, it only has an 84% win rate. So your win rate is pretty good, but you still want to make sure that you're properly managing your trades. Now, coming into this day's price action, you guys can see we actually have a couple inverse fair value gaps forming, and not all of them get respected. You're going to want to wait until the 9 a.m. mark to start looking for inverse fair value gaps that want to get respected. The 9 a.m. mark is roughly at this candle right here. So after this candle, this is where you're going to want to search for inverse fair value gaps. And then as the candles are forming, we actually create an inverse fair value gap right over here. If you don't know what that looks like, an inverse fair value gap looks something like this. You're going to have candle number 1 at the top. You're going to have the actual imbalance, and then you're going to have candle number 3. Candle number 1, the imbalance, candle number 3. I have a full in-depth guide on this video that I'm going to link in the description. If you guys are complete beginners, I highly suggest you watch that video before continuing with this one. So pulling out my box tool, I'm going to create the inverse fair value gap, and it's going to look something like this. And if you pay close attention, we actually have an order block that got sweeped right before at around 593.5, and it got sweeped here once again. Now, once you have confluence number 1 being the inverse fair value gap, you have confluence number 2 being the order block. Confluence number 3 is a break of structure or break of lower band VWAP, and in this case we have a break of structure at around right this point where you want to take entry. For your take profit, you're going to want to target your swing highs, set your stop loss slightly below some new lows, creating a 2.5 risk to reward ratio on this specific trade. Now, we actually took this trade live in the Discord server, so if you guys want to come trade with me, click the first link in the bio and it's going to give you guys a free invite to the Discord. So once you have this simple and basic concept down, you're going to want to focus on your trade management strategies. So trade management is the act of actively managing a trade, such as setting a stop loss, moving your stop loss, setting take profits, trimming contracts or positions, and exiting positions. So we're going to come into it with a hypothetical scenario. Let's say we enter 10 contracts for one position. So we're entering 10 contracts for one trade. Your initial stop loss is going to be set at a standard 35 or negative 35%. What you're going to want to do is wait for your first trim of 5 of your 10 contracts to be at 10%. Once you trim those contracts, you want to move your stop loss to break even. What this is basically doing is you're guaranteeing yourself a 10% return on the trade, and then moving the rest of your contracts to a break even point to make it essentially risk free. Now, let's say you got past that point and we didn't hit break even. Now your second trim for 2 out of 10 contracts is going to be 20 to 30%. This is where you're going to want to move your stop loss to at least minimum of 10% profit. So worst case scenario, for the last 3 contracts you have, you're going to hit a 10% profit. Lastly, the third trim is only going to be 2 out of the 3 contracts you have left at 50% profit. This is where you move your stop loss to 20 to 30% profit and let the one last runner contract you have run. Now, let's say hypothetically this runner contract ends up going to 400 or 500% profit. How you're going to want to actively move your stop loss is you want to keep it at a halfway profit point. So if the trade is up 500%, set your profit stop loss to 250% or even 300%, or even higher than that. You can do 350%. The minimum is going to be your halfway point. If the trade is up 1,000%, and I've had that happen before where the last contract I have is at like 1,000 or 2,000% profit, you're going to want to just set a stop loss at like 500% or 1,000% or half of whatever you have and just let the trade run. Yes, you might miss out on a couple percent profit here and there, maybe 100% or 200%, and that is a lot, don't get it wrong, but it's better to try to catch as much and maximize the move as much as you can. And this trading strategy allows you to maximize your win rate and directly contribute to maximizing your profits as well. Now, I will say that this strategy mainly works the best for options because options are a lot more volatile and you kind of need that safety net. I know a lot of futures traders are going to watch this video and you guys are going to think that, oh, this is actually leaving money on the table. Why even do this if you're confident on your strategy? Options is kind of different. Options, you can be up 100% and down 50 the next. And after trading options for 5 years, this trade management strategy has protected me and allowed me to consistently grow my portfolio time and time again. And I also threw a basic definition of risk management here. It's managing how much of your portfolio you're risking per trade and how much of the position you are risking. So what that essentially means is when you enter a trade, you're not going to risk your entire portfolio in one trade. You're only going to risk a certain percentage of your portfolio. Now, once you enter with that certain percentage of your portfolio, you're only going to risk a certain percentage of that position. So you're not going to risk the entire position in itself. You're not going to have a 100% stop loss or let it go to negative 100%. You're going to want to only risk maybe 35% of that initial position that you enter with. Now, in combination with the strategy I just showed you guys, as well as the trade management rules, you guys are well on your way to building a consistent and profitable trading strategy. Nothing is 100%, but the whole game of trading is being able to be right more than you're wrong and make more money than you're losing. Because one thing that's guaranteed is that you're gonna lose and you're gonna win. But the strategies that we went over today and the trade management rules that I went over, it's going to help ensure that you're winning more than you're actually losing. And if you can build a system where you're winning more than you're losing, you're on the path to success. If you guys want to learn more, I highly suggest you guys join the free Discord in the bio. I'm also going to be running the next 500 to 100k trading challenge very soon. The official starting date will be posted in the Discord server for anyone that wants to tag along on the journey. And if you guys have any questions, feel free to follow my Instagram and DM me on there directly and get my free trading guide in the bio. I'll see you guys on the next video. Take care.